Hey everybody, this is Ryan Mallory with SharePlanner.com's Swing Trade in the Stock Market. In today's episode, we are going to talk about, am I ready to trade? Are you ready to pull the lever, start trading with real live money? In today's episode, we have an email from a person who lives over in Sweden, so way far away. I've never actually been on the other side of the pond. I know that sounds crazy. A lot of you guys have probably done it many times. I have not. I've been many places in North and South America, just never on the other side of the pond. So Sweden is really only what I've read about it in the textbooks and, through geography lessons, I guess. But in any case, usually I give people a good Florida redneck name to conceal their identity so I'm not embarrassing them. But this person asks me to give them a good Swedish redneck name. I didn't even know there was rednecks in Sweden, but here we are. We got Swedish redneck names. He asks to be called Kenta Bob. That's Kenta. So I've never heard that name before. Kenta Bob, Swedish redneck. And Kenta writes, "Hi, Ryan. I'm a big fan from Sweden. I discovered your podcast about a month ago, and I've already gone through the entire archive and listened to many older episodes. I love the show and your whiskey reviews. You can call me by my Swedish redneck name, Kenta Bob. I started swing trading about 3 months ago and have been paper trading for over a month. The plan is to start trading with real money in July as I feel ready. I'm also planning to begin learning about trading in day trading in July and start paper day trading in August. I believe swing trading suits my personality and profession the best, but I want to try everything now that I have some time off this summer. I'd be more than happy if you turned this email into an episode and touched on my questions. Here's a quick summary of my setup. I use price action, primarily support, resistance, and sometimes chart patterns, and I trade stable U.S. stocks. In a bull market, I usually trade stocks in strong sectors and short a few in a weak sectors. I use the 200-day simple moving average to identify long-term trends. Additionally, I sometimes use the 10 and 20-day exponential moving average for trade signals. Rate of change to filter out the slow-moving stocks of 0 to 1% moves, stochastics like you do to avoid overbought and oversold stocks, and ATR to calculate stop loss and position sizing. My questions: do you have any thoughts or comments on my setup that I've just mentioned? Number 2, in the books that I'm reading and various YouTube videos, people talk a lot about Fibonacci and different retracement tools, but I haven't found any episodes where you talk about it. I know it can be applied to both daily and intraday charts, but it's mostly day traders who seem to use it. Do you think that it could be useful for me as a swing trader or as an aspiring day trader? And do you use it yourself at all? And if so, what Fibonacci settings do you recommend in TradingView? Could you share any thoughts on what I should focus on as I gradually move into learning day trading now that I've gotten a decent handle on swing trading? Based on my setup above, which parts don't really work for day trading and what could they be replaced with? Huge thanks and God bless. Kenta Bob." All right, Kenta Bob. Golly, I don't know if I'll get used to that particular name, but nonetheless, I like the uniqueness. Definitely never used that name in the almost 500 podcast episodes I've done now. So essentially, the title of this podcast episode, "Am I Ready to Trade?" is the basis for this email here. Couple of things that I think about first. Day trading. He's going from swing trading. He's learning about it. He's paper trading it right now. We're in the month of June of 2025. In July, he's ready to start with real money. I've often said in many other episodes as well that paper trading will only take you so far. And the reason for that is because you actually feel better about trading with real money when you're paper trading because it's a lot easier. There's no emotions to it. You're not trading with real money. It's just like in Monopoly. We're incredible businessmen in Monopoly. We're racking up properties. We're getting all these incredible hotels and houses being built. But you try to duplicate Monopoly in real life, it's a little bit harder. You're dealing with regulations and you're dealing with red tape and really you don't have the money to do what you thought you could do in the game of Monopoly. Kind of like the game of life, too. Remember, I don't know if that's even a game still, but in the 80s and 90s when I was growing up, we had the game of life. And, you would made raising kids and buying a home and having a great career seem easy, but you apply it to real life and it's not. But what paper trading does do for you is it does help you to understand the mechanics of trading. It helps you to understand limit orders and market orders. Now, it won't be perfect because you're not actually filling anything. In real life, when you're trading, you're actually being matched. If you're buying a stock, you're being matched with the seller, and if you're selling a stock, you're being matched with the buyer. Paper trading, you're not, because you're not really paper trading with other people. You're just paper trading on a simulator, so you're going to get the perfect fills every time. So that's the big difference. But what it is good for, like I said, learning about market orders, limit orders, seeing how they work, seeing them, in make-believe action. It's never going to duplicate the real world, but you do get a good handle of how the order processing does work. So at some point you do have to go to real money, and then that's where position sizing is important. And the other thing I tell people, when you go to paper trading to real money, don't throw your whole life savings at it. I mean, I think it'd be crazy that if you had $100,000 in the bank and you go dump $100,000 right on all of those trades that right out of the gate, because there's a good chance that the transition from paper trading is going to be very difficult to real money. And so I would caution, about the position sizes. I would use smaller position sizes, smaller account size, until you get under control of the emotions, because the emotions are going to be far, far different than what you encounter in day trading or in paper trading. My other issue with what Kentabob's talking about here is really with question 3, where he talks about, now that I have a decent handle on swing trading. And oftentimes in these emails, I'll pick up on little subtleties and nuances that they'll state in their emails, and I'm like, oh, I don't even think that's really something that they were expecting to be addressed, but I'm going to have to address it. And so they talk about already having a handle on swing trading. I try to be a nice person in these things, and I'm trying to be a nice person here, but to just be brutally honest, you don't have a handle on swing trading. You definitely don't have a handle on swing trading yet when you haven't even gone live on the swing trading. So you may understand like a little bit of the how it works, from, okay, you're holding stocks overnight, you've got to manage the risk, you got to plan out your profit targets, plan out the trade, follow your plans, but you haven't actually seen that in live action yet. And I'd honestly be willing to say, I mean, 30 years from now, 30 years into it for myself, I don't have a handle on swing trading. And I say that with the utmost, humility that I can, conjure up, is that I've been doing it for 30 years, and the market still throws things at me that I've never seen. I think 2025 has been an incredible example of that. Just some of the most wild price action that we've seen in quite some time, and some of the craziest responses to major market events that we've ever seen. And so the reason why I don't have a handle on it is because is the very reason why I manage the risk. Why managing the risk is so important. And I don't think we should ever get to a point where we think that we have a handle on swing trading, because we don't, because it'll always show you something new that you've never experienced before. That's why, again, going into it with as much clarity on how you're going to manage the risk, where you're going to take profits at, and what kind of position sizes you're going to use, and so forth, is so incredibly important. I also take a little bit of issue with how fast this person, Kenta Bob, is wanting to accelerate the learning process. And it's really not something that you do in a hasty manner. It's something that you rush through. It's really something that needs to be handled over a long time. If you remember one of my most recent episodes, it might have been the last one that I did, I talked about how people who are scalping, it was the last episode, they have to grind. They have to grind away. It's not something where you're trying to get huge returns on your trades. It's something that you're really just grinding away and taking pennies on the dollar sometimes, and making a lot of different trades. And the same thing with day trading. I think one of the big differences in day trading versus swing trading, and I think most people are not going to be good at day trading just because it's a much more difficult skill to master versus swing trading. And that's because you don't have the benefit of holding positions overnight when you're day trading, versus swing trading you do. You also have to be right the very first day that you get in. I can't tell you how many times I've gotten into a swing trade and I'm not right on the first day. I would probably even go as far as to say that my least favorite day of a swing trade is the first day that I get in. I always hate that day, because let's say you get in and the stock's already up 2%, and you're going ahead and seeing that it's breaking out, it's breaking through some resistance, it's now up like 2.25%. So you go ahead and get in at that point because it's now cleared that major resistance hurdle. And then it pulls back and it's, up 1.75% on the day. But when the day finishes out, you're down 0.5%, whereas the stock was up 1.75%. it feels like you got off to a rough start on the trade, but the stock itself actually didn't get off to a bad start. And that's one of the things that I hate about, that first day of trading or swing trading, is that sometimes you're not in what feels like the most favorable position, or, the stock finished higher, but you actually finished lower. And that's just part of trading. There's nothing wrong with that. That's going to happen at times. But it's usually the days after where I actually see the gains start picking up, when that momentum sees the follow through and the crowd joining in. And then I forget about that first day of trading. But initially, I don't like that. But in day trading, that's all you have to work with is that first day, because it's the only day. And so when you're day trading, one of the things that I would go into day trading with is a lot of experience of swing trading. And right now, you don't have that experience in swing trading. But one thing that you can have is swingtradingthestockmarket.com. Yes, this is going to take you to my SharePointer website. Really cool feature that goes along with this show. You're going to get an opportunity to join the trading block. Or if you want, you can sign up for the Self-Made Trader. This is going to be my flagship course that teaches you everything that I know about trading, 30 years of trading experience and lessons that I've learned, packed into over 25 hours worth of videos. And on top of that, you're going to get a lot of lessons and homework assignments that you go through. It's a very, very long course. It's a 14-week course, but I would encourage you to check it out. You can learn more about the Self-Made Trader down in the podcast notes below. Now, he asks me about Fibonacci retracements. I do use Fibonacci retracements. I don't really make too many trades off of it. Sometimes I'll look at it if it's in conjunction with a pullback on an existing trend line. Let's say that this trend line has been tested multiple times, and I'm seeing the stock pull back to it again. It looks like there's some healthy consolidation or basing, and it looks like it wants to finally bounce. I'll also look at it from a Fibonacci standpoint. I put a Fibonacci overlay and see if it's not pulling back to one of the key levels, like a 38.2, a 50%, or a 61.8% Fibonacci retracement level. If it's doing that, that can give further confirmation that there may be some legit support there and a reason for it to bounce. But using it in isolation, I really don't. For one reason, you never know which one it's going to be that it pulls back to, whether it's going to be the 38, the 50, or the 61, and it can be any of those. And it really doesn't necessarily mean that a trend's dead if it pulls back to one versus the other. Now, the most healthy one to pull back to is the 38.2, but oftentimes you'll see it go down to 50, or sometimes where you see a lot of people get shaken out of the trade is when it pulls back 61%. But nonetheless, trying to make a trade basis that, okay, I'm going to buy it as soon as it tests the 38 or tests the 50 or tests the 61, that's not the best approach to it, because you're really just, taking a crap shot at it, and it may not do any of those. I use them for both retracements and bounces. If you look at the bounce off of the April 7th lows, clearly the market could have cared less about Fibonacci retracements to short on any of those retests, whether it was the 38, the 50, or the 61.8. Instead, it blew through all those, and now we're sitting at all-time highs. So the Fibonacci retracements, while they can be good, or informative, probably is the better word. It's not necessarily a strategy that I would rely on. And one that I would rather say is worth looking at is pivot points. I love pivot points. Again, I don't necessarily trade directly off of them, but they give me a much better clarity about what the overall market's doing. What that essentially is, for those who don't know what pivot points is it identifies 3 resistance levels and 3 support levels. The 3 support levels typically being below the previous closing price, and the 3 resistance levels being above the previous closing price. And when it gets above R3 or down below S3, that's usually some major extremes where if those levels are being tested, I'm not going to go ahead and get into a new trade, whether it's a short at a S3 level or a long at a R3 level. Not going to do it. And these are things that are available on TradingView, on TC2000, on TrendSpider. They're available everywhere, very easily accessible, but they're very helpful. And it's basically providing you support levels with a formula that uses the open, the close, the highs, and the lows from the previous day. So really a cool feature there. I prefer those, especially if you're looking at it from a day trading standpoint. Another thing, if you're getting into day trading one day, or you're on the verge of getting into day trading, I'm not as big of a fan of trying to trade these high momentum plays that are up 50% in the morning and hoping that they'll go up to 60% and that you can get out for some change, because oftentimes those are the stocks that get faded the hardest and it's most difficult to manage the risk on. Instead, I would look at trying to trade like a SPY or a Qs. And it's very much like when you're starting off swing trading. Don't try to get rich, okay? Especially in a commissionless environment. Learn the mechanics of day trading. Learn how to make money with a smaller account. Get that confidence up before you start expanding your portfolio or taking much bigger risks. And if you enjoyed this podcast episode, and I hope you did, please make sure to leave a 5-star review and tell me in the comments below, what is your struggles right now when it comes to swing trading or day trading, and what would you like to see a future podcast episode be about? Love to hear from you guys. Make sure to check out my flagship course at sharepointer.com, or you can learn more about it with a link down in the show notes down below. And again, send me your questions, Ryan at sharepointer.com. Let me know what's plaguing you. Let me know what's bothering you. I'd love to help figure out some stuff with you guys. Thank you guys, and God bless.